Hello and welcome to Stock Value Tips. This content is for educational purposes only and is not financial advice. Let's dive in. Today we are taking a closer look at Procter & Gamble because its share price has declined, which may have created an opportunity for long-term investors. Procter & Gamble is one of the world's largest consumer staples companies, with a portfolio of iconic everyday brands used by millions of households globally. The company operates across essential product categories such as beauty, grooming, healthcare, fabric and home care, and baby and family care. With a strong global presence and significant pricing power, Procter & Gamble benefits from stable demand and consistent cash generation, even during economic slowdowns. This defensive business model makes the stock particularly interesting during periods of market uncertainty. Procter & Gamble currently faces several macroeconomic and industry-related risks, though none threaten the long-term viability of the business. Consumer spending pressure remains one of the most significant risks, as higher interest rates and cost of living challenges make consumers more price-sensitive. Pricing power is still present, but the ability to continue raising prices may be more limited compared to recent years, which could slow revenue growth. Input cost inflation, including raw materials, transportation, and labor, remains a moderate risk, even though inflation has eased from recent peaks. Currency fluctuations also represent a headwind, as a stronger US dollar can negatively impact reported revenue and earnings. Finally, tariffs and geopolitical risks are relatively low, as Procter & Gamble benefits from a globally diversified manufacturing and supply chain. Overall, these risks point to slower growth rather than structural weakness, reinforcing Procter & Gamble's role as a defensive, high-quality business. Despite current challenges, Procter & Gamble has several strong long-term opportunities ahead. The company benefits from one of the strongest brand portfolios in the world, providing significant pricing power and customer loyalty. Demand for Procter & Gamble's products remains stable, as they belong to essential everyday categories that consumers continue to purchase even during economic slowdowns. There is also potential for margin recovery as input costs stabilize and operational efficiencies improve over time. Emerging markets represent another key growth opportunity, driven by population growth, rising incomes, and increased brand penetration. Finally, continuous innovation and product premiumization allow Procter & Gamble to differentiate its offerings and maintain long-term profitability. Together, these factors support resilient cash flows and long-term value creation for shareholders. Over the past 10 years, Procter & Gamble delivered an average annual return of approximately 9.3%, including dividends and dividend reinvestment. This highlights the stock's role as a steady, long-term compounder rather than a high-growth investment. From a valuation perspective, Procter & Gamble currently trades at a price-to-earnings ratio of around 21.1. Its beta of 0.38 reflects low volatility and a defensive risk profile. The company trades at an EV to EBITDA multiple of approximately 14.5. Net debt to EBITDA stands at around 1, indicating a healthy and easily manageable level of debt. Return on invested capital over the last 12 months is close to 20%, reflecting strong capital efficiency. The stock also trades at a price-to-free cash flow multiple of around 22.6, compared to roughly 10 years ago. Importantly, profitability metrics are near the highest levels in the company's history. Net income margin stands at approximately 19.7%, while gross margin is over 51%. Both figures are well above the company's long-term averages, highlighting exceptional operational efficiency. Procter & Gamble is widely recognized as a dividend king, having increased its dividend for more than 65 consecutive years. This demonstrates exceptional consistency, discipline, and commitment to shareholders. The company generates strong and predictable free cash flow, which comfortably supports ongoing dividend payments. In addition to dividends, Procter & Gamble regularly repurchases shares, helping to support earnings per share over time. Capital allocation remains highly shareholder-friendly, balancing dividends, buybacks, and reinvestment into the business. This approach allows Procter & Gamble to deliver reliable income and long-term value creation, even during challenging economic periods. For income-focused and defensive investors, this dividend track record represents one of the strongest attributes of the company. To summarize, Procter & Gamble represents a high-quality, defensive business with strong global brands and consistent cash generation. The company offers reliable dividends, low volatility, and long-term stability rather than rapid growth. As a result, Procter & Gamble may be best suited for long-term investors and those seeking dependable income and capital preservation. Before we wrap up, I'd love to hear your thoughts. Do you currently invest in Procter & Gamble, and how do you view the company's future? Thank you very much for watching. If you found this video helpful, please consider leaving a like and subscribing to the channel for more stock analysis and investing insights.